The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 5th day of December. My pleasure to be here Monday through Friday. And thank you to our hosts, great shows. Hopefully we can keep that standard up. And of course, you got shows coming up all the way through until 5 o'clock today. Hey, Dow's up 97 at 19,267. The S&P is up 16 at 2208. Comp index is up 60 at 5,316. The VIX is down at the 1268 level, below the teens. Very interesting. The E-mini is up 15 at 2207. It needs to get to 2214, 2,214 for leg D. Remember, that's what we require. That's what we ask for in the Chapman Wave methodology. We go for those Ds. Once you get to the D, other things can happen. Most importantly, we're looking at the weekly chart with an E/A. Now, that's an ironical thing because E says, hey, you got to start being real careful. A says, oh, fantastic. You should still go to B, C, and D over the coming weeks, taking you into 2017. I'll be making some decision. I've already kind of made a decision, but I'll be making some decision later this week as to what are the chances that this, in all the indices, we've already started new weekly, a buy mode in the weeklies to go higher. So the monthly chart only has to go to 2214 for it to extend leg C. This is the 120-minute chart. Why am I spending a little time on this? Because I want to explain some things to you. See this cup pattern? See this cup pattern? Well, last night, you see, so Brexit, you had a couple of days in Brexit where the market just tanked, and then all of a sudden, whoosh, it went to new highs. Wait a minute, we had the elections, and you had just a couple of hours, and the market fell 700 points from at midnight. It turned around, and that was it. We haven't even looked back since then. And now we had just really, it was, let me show you the chart. Look at the 10-minute. I was looking at this last night. I was about to trade it. Actually didn't trade it. I'm not even sure why I didn't trade it because I had everything planned. I guess I was really preparing for my webinar tomorrow night, my 3-part webinar, and I just didn't want to be distracted. But it was at 2170. What was the low? 2179, round number low. And I was thinking at 2180 that I would just put in a position and just hold it with a stop underneath that low and just hold it all the way through until, who knows? Well, I didn't. And I could have, would have, should have. No big deal. There are always plenty of other trades. But look at this pattern here. Whatever we require in the Chapman Wave methodology, we want to get to a D. If it fails at a B or a C, goes below the starting point, becomes a B minus, C minus. Look at this. He has a peak D. It pulls back all the way from the 2190s, goes down to the 2179 level, goes peak A, B, C, pulls back. This is a 10-minute E-mini. Goes sideways, has a little scary dip there at about 2:30 this morning, and then it starts a whopping move up. It goes D. Finally, you get the D. But it was so powerful that the retracement was just very slight, and then it went to E and F. F is where you've got to be really careful. Goes to peak F, pulls back, and all we've used up really is time from the 2205 area down to the 21, I think it was 97, 2198 level. And now we've gone to this higher high. What about all these trend lines? What does all this mean? Well, this is what I'm going to be teaching. Look at this beautiful trend line right here. You just continue it until it breaks down. And then, and in fact, we broke down. And then the moment it spiked above it, it says, hey, that's support. What about that 9-period moving average? What about this black line here? Wow, look at that beautiful support. So I'll be teaching all these techniques. I'll be teaching you the reasons why these particular techniques can really help you in assessing where you are, what you can do, give you a chance to cover with a stop or a buy stop so close that it really gives you an opportunity to to milk the upside if it's possible, and to keep your losses very short. The most importantly, what I've been looking at here, now I'm going to go through everything. Beginning of the week, let's start off. Here we go. INDU, this is the Dow. The Dow is in leg E. It made a new all-time high today above the 19,225 level. I've been drawing this arch formation in, saying, okay, that's what we're going to watch for. Why did I not go short when I always talk about going short the Dow when we get to a D? Or at least that's where we want to anticipate that at a D we're going to go short, because the strength of the moving averages was just so powerful that I didn't feel comfortable at all. That's number one. Number two is the weekly chart broke out of resistance, and that says to me that you've got the MACD, moving average convergence diver. I'll be teaching that as well, how you can use these tools. That'll be the second session. And the stochastics at 97% in the weekly chart, that is really good. And the 90% in the monthly is really good. So I say we're going to stay long. But what we did is we did something very unusual. I hardly ever do this. We went long last week, the IWM. That's the iShares Russell 2000. Well, we didn't go long. We went long, the 300% long. And one of the reasons is that in the Chapman Wave methodology, the aspect that really generated for me the consideration that there could be four peaks, and at the fourth peak you need to be careful, was that when I used to hand chart from way back in the 1970s and 80s. And most importantly about that particular technique is it happens so often that it just cannot be ignored. It's foolish to ignore it. And at the same time, I'm just trying to find right here, what happened to my, don't tell me I got rid of it. Why does it always disappear? Do I blip it out? I guess I do. How embarrassing that is. I guess so. All right. Well, I just wanted to show you the concept, which is already a very simple concept, and that is in the Chapman Wave methodology. Okay, we'll go here. So what I'm going to be teaching tomorrow night, there's a webinar that starts tomorrow night. It's 3 sessions. It's really a course, one of the few courses I've given in quite a long time. I've given webinars where I'm discussing the market, and I was expecting new all-time highs. That's been going on for almost 2 years now. But at the same time, most importantly, what I've been looking at is I love teaching, and I love the aspect of being able to generate ideas for people to be able to follow. So I decided I would have a 3-course webinar series. Starts on Tuesday, December the 6th. That's tomorrow night at 6 o'clock. Coincidentally, it was I completely forgotten that I had a very important meeting, a council meeting for what I'm on. But anyway, that's the way it goes. So anyway, 6 o'clock to 7:30 p.m. tomorrow night. It's archived. You not only get that, you get my newsletter. I mean, I don't know how much more I could have thrown in here, because it's just for me so important. I love this aspect of being here at TFNN, and that is being an educator. And look at this. Simple technical tools to analyze charts, the 3-part course on the Chapman Wave. Starts December the 6th, 6 to 7:30, December the 20th, 6 to 7:30, and January the 10th, 6 to 7:30. I'll talk a little bit more about it. Meantime, let's just quickly run through and say that gold is tanking, but the dollar is also coming down at the same time. Isn't this fascinating? And the IWM, which we're along, is actually starting to move, maybe to that next C. We'll be right back after these messages.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So let's just run the numbers here, and then we'll go on with, I'll show you what I'm going to be teaching and why and what the results are so far, what we're doing. Let's go straight to the, so let me go back. So the Dow is right now at 19,263. I had said that I believe that there's kind of limited upside. I see the upside. I expect the upside. We're along the Dow. I'm anticipating that I did not want to add a short to it and then have to try to get back in at this level. This is where you want to be in. We're in from quite a few points ago in the Dow Diamonds. And I just want to hold that position as long as I can. Why? Because there's a chance. How many people are long? That's the question you have to ask yourself. I would suspect that the more, how can I put this? The more market savvy the bigger investors are, the greater the chance that they've been ameliorating the risk, that they've not been as fully invested as possible because there've been all these things that you got to be careful of. Here's a vote that comes along, and intra-night, the market pulls back. Look at this. Here's the E-mini. It pulls back right there. So there's the Italian vote. Market opens, and I'm just watching this, and I'm thinking, whoosh, it comes back down. And it was fascinating because I was watching the euro, EUR-USD, the euro currency pair, and it just tanked. I mean, I looked at this and I thought, wait a minute, something's wrong with this picture. Why is it? It closes at 1.067 on the second, and it opens up on the 4th at 6 p.m. No, it was a little earlier than that. It opened up at 6. So it opened up a little earlier, and I see it moving along. I just see numbers flying by. It's got all these digits, 1.07234. I'm thinking, what's going on? I had to look at the chart because those numbers, they're too many. And then what happens is it pulls back and pulls back. And what does it go to? It goes to 1.05032. Look where it is right now, 1.072. Should we count the peaks? A, let's just do this live. A, B, and then it pulls back. It goes A, fails again, and then it starts to move. It goes A, B, C, D, and then E, and F, because it's all one move. Then it restarts and it goes A, B. Now this is fascinating, C, and that's G/C. I'm going to put the G in a moment. Why? Because it's still continuing the other move. But this is how I got into the Chapman Wave instant restart. This didn't do it in 3 bars, but if it did in 3 bars, I would have put in a circle. And the way I used to work this out, I used to say to myself, wait, why do I get to a G and eventually I get to, you can't go higher than a G. I get to like a new A and it doesn't work out at all because then it fails. But it goes, and then I figured out, you know what it is? This is a G right here. G/C. Now I can start figuring things out. And what happens is it goes C and then finally it goes to D and E. So these patterns they repeat all the time. So this would have been a down move with a down arrow. Good, there's nothing wrong with that. This would have been a question mark. I could have put in the inverted V-shaped pattern, which says that's the secondary cell, the more important one, the one that was actually missed, right? And then I'm looking in and I'm saying, wait, cup formation. I love these cup formations. I'm going to teach the cup formation in the webinar coming up. I mean, these are patterns you're going to see over all your life in the market. This is what you're going to see. The cup formation, the V-shaped formation, that's one. Straight line move, that's really one. 1A is straight line move, either up or down. 1B is up or down. So it's 1, part A, B. 2 is the cup or V-shaped pattern. And 3 is the inverted V or the arch. And that's what you're going to learn. And these are just simple concepts. So now look what we're looking at. We're looking at E in the daily, F/A in the, that's either very bad or very good in the weekly, and the monthly is in D. Haha, let's go to the S&P, SPX.X, here we go, S&P, must have hit the wrong key. There. S&P hasn't gone to leg E, and this is what I'm thinking, that the Dow is the leader. Remember, I've been talking about this for 6 months now. I'm saying the Dow is the first time I've seen just a perfect setup in the Dow for market conditions. All right, so now we've got the S&P lagging a little. It has to get to 2214.21 for leg E, but it's making that cup formation. In fact, it's a very complex formation, but I don't want to talk about it right now. E/A in the weekly. C in the monthly, and C continues if this month it goes above 2214.21, and it fails and becomes a peak C if there's none all the way through December. All right, let's go to the QQQ series. QQQ series, very bad failure. And I drew this rectangle in ages ago. I'm going to teach you when you can do the rectangle formation. I have to tell you the information that I'm going to give you in each 1.5 hour webinar, which you'll be able to go through and send me questions. I'll answer the questions. I'm really looking forward to this. This is you and me. So you'll be getting my newsletter. You're going to be getting, if you become a subscriber, you actually get it with a $100 discount. What a nice bargain you get. And then, most importantly, is I'll give you exercises as well as you send me your answer, and I will send it right back with with a correction or correct and say, hey, perfect, and we'll be moving along together. And then you'll go to the next webinar series. So the first webinar is going to cover webinar 1, what is to be studied, the core Chapman Wave concept. That's going from a trough, a recognizable trough. There it is. Going to peak A, B, C, and then D. All right. Most importantly, peaks and troughs, we're going to discuss them. I'm going to show you that 1 penny makes a huge difference. Incumbent upon you, your only big thing is to be able to get that to identify the peaks and troughs correctly by 1 penny. The implications, what makes it go, what is a rising trend? What is the tide rising and the tide declining? Making sure each peak or trough is correctly identified, their function. Number 6 is buy signal and what level it upgrades to a buy mode. Remember, buy mode says you're going to go to D. What nice knowledge. And then the significance of a peak, D, the 4th highest peak, and what can we look for at that level, etc. And they're just examples. I'm excited. Here we go. live example. So QQQ failed at a peak C. It was underneath the previous high of 119.66, and it hasn't broken above it, and I'm not sure it's going to. And this is saying to me, this is within a few days. I think all I'm waiting for is just a couple of little things to come into place, and then I probably will start either taking off the money on the long side or adding, starting the short side or adding to our short positions. All right, we have a couple now. All right, so that's it, the IWM. And this is what I'm thinking is going to go to a leg C. Somehow or other, it's going to squeak to 134.10. It needs to do it quite soon. And then we'll see, is it going to go to a D? It should go to a D. I don't know if it's going to go to a D. I think these market conditions are ripe for the IWM, the Russell 2000. We'll see. Okay, let's go to gold right now. Gold is, in fact, it's a little bit better than it was. It's up, it's down 13 at 1164. It went a little lower earlier on. The dollar right now is trading down 29 cents at 100.48. No big deal, but it's consolidating. I'll be back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So let me go through this now. I want to go through it slowly because this is such an important period for many people listening. Within the context of the dollar, the reason why I've been expecting that the dollar would go to leg D in the monthly chart, remember how important leg Ds are? I just went through that whole thing in the Chapman Wave methodology, is because at D, other things can happen. Now, the weekly chart, the leg D that's unfolding in the monthly chart with 102 point, was it 05? Yeah, 102.05 recovery high. just above the 151, which was just above the 139B. So you got B, C, and D just pennies away. I mean, it's amazing that over a period of 2 years that this could happen. The peak E that's unfolding now in the dollar, I did not put an alternate count of E/A because although there's an instant restart, the plunge down on the 11th, you remember that was the evening of the vote, the dollar tanked and then it rallied with everything else. That's a little too deep for an instant restart to be comfortable. It can happen, but it just says, you know what, we've actually used up the downside, but we've also used up a lot of upside energy. So maybe this is going to take time. So I'm looking at the dollar. I'm saying, okay, how are you going to analyze the daily chart of the dollar? Well, maybe that was an aberration, but that 95.89 went below in the instant restart. I can make a case. I can't really go down to 95.34, the low of the 30th of September. I try not to do that because that really, you've already started your buy mode. Why would you go all the way back to the trough of C? So it says to me that maybe it was just an aberration, overnight aberration, and that in fact this is a continuation of this peak deal that was made on the 25th of October at 99.12. But look at the way the stochastic dropped so sharply into the single digits. Just single digits, just touched 10%, and then ran sharply high. Look at the way the MACD turned down very sharply, went negative, which confirmed that down arrow. So that says this is a very important moment because technically, I'll do it just because I'm talking about it as an explanation. This could be an F/B, and therefore this could turn out to be a peak F. If the dollar really trades in the 99s over the next 2 days, then I have to say, you know what? I don't know how we're going to get up to 102.06 for leg C. Okay, so I'm just making it clear. We have no position. If I was long, I'd stay long right now, the dollar. I'd rather be stopped out than to switch. And then if I do the concurrent, if I'm looking at the EUR USD, and oops, don't type it there, type it here. EUR USD, the currency pair, and of course it's made up of many currencies. There was a break underneath that, and I've counted that as a trough, as a leg D to the downside. This is a very strong move to leg B. I'm sorry, leg A minus. And now it's not even a leg A. I have to have another bar. This isn't, look, we have no right side high or low. This is the low. I need something on the right side here to be able to, I'll be talking about that as well in my talk tomorrow on the Chapman Wave techniques. This is not an A. That is not an A. Why? Because there is no trough. You can't have it without a trough unless it's an instant restart after a D. So this says, don't be carried away here. This could just be a bounce. But this is a bounce that it comes, look, the dollar is breaking to fractionally new highs, and the EUR didn't take out, with all this news, hasn't taken out the low of March of 2015 at 1.04617. I have respect for my H to an M pattern. You see that? We'll be learning about that as well. The lowercase h to the lowercase m. And that's saying to me, there's a chance now that the dollar could be pulling back and the euro USD dollar currency pair could in fact be breaking to highs. Now, if tomorrow there's a higher high above today's high, whatever it is today, even by 0.0001, that could start the new A. And then we'll be looking to see what's happening here with the MACD. Look at the way it was improving in the histogram. So I can't deny that the dollar's been faltering in the short term since it made that high of that peak right there at 102.05 on the 24th of November. So I'm going to be watching this closely. Have no position, but it's really part of what I'm looking at. And that says to me, be prepared then that maybe your IWM won't go to the new leg C or even a D. But this is the chance that we're taking because the pattern is so strong that it suggests there should be a test of 134.10 to go to 134.11 or higher for a C. And then we have to see, is there enough energy now in the market to go on higher? Okay, now let's look at the TLT. The TLT held the low, the peak E low that was made, trough E low that was made 3 days ago. Look at the TBT. I focused on this for my all my different charts that I showed over the weekend. I showed the TBT, TBT, having made a peak F with a question mark at 42.15 on the 2nd of December. Going to watch this really closely. Look, here's another technique that I'll be teaching. How do you use these trend lines? What the heck is that? Look at that green line, dashed line. Look at the red line. But wait a minute, isn't that just a beautiful area for the market to repel for this particular instrument, the TBT, which is the ultra short Lehman 20-year Treasury fund? Yeah, look at that. And the stochastic isn't confirming. It's down under 80%, it's 70%. And the MACD is flattening out and just deflected lower. We could be looking at something that's very interesting. Then you've got to ask yourself, wait a minute, dollar just tanked. Why isn't gold going higher? Well, I'm beginning to warm up a little bit to gold. No, we haven't got any position. I'm watching it really closely. I think gold is getting closer to some kind of a good reaction to the upside. I don't know when it'll be, but it's getting a little closer. I think a chunk of the down move has been done, and now we're going to be watching it closely. That's what I'm saying. I don't think the dollar has that much at this moment on the upside. I'm not sure the market without some kind of a breather has that much on the upside, but we're still in the buy modes. I hope I'm making myself clear. Now, let's go on. So I've done that. Oh, crude oil is the one thing that I've been asked about. I haven't done. Crude oil is a leg D. Here's a pattern that I'm going to be teaching. The left side, right side price time match. Look, there it is. This is with the, I love this. This is with the plumb line right there. Here's the plumb line. Sometimes it's perfect, sometimes it's not. The plumb line from the high in the crude oil continuous contract from the high of the 19th of October at 52.75 went down to a low of 42.73 on the 14th. And that took 1, 2, 3, 4, 5, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, about 22 days or bars. And on the upside, we've got a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. Oh, I must have miscounted. But there's the left side, right side. And that says by the 8th of December, crude oil should be testing and maybe breaking just above 52.75. And then we might be looking at it as coming back down again. So I think we've covered a whole chunk of things, and we'll start looking at some stocks when we get back. Remember, what are we looking at here? We're looking at my webinar coming up tomorrow night. Simple technical tool.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi everyone, we're back and we're looking at a question about SLB Schlumberger. Great move up. It's gone A, B, C, D, spiked to an E. Let me just do this right now. Put it in Schlumberger, which is in the oil service. Watched it for years. I don't know why. I just missed it this time. Didn't get the oils at all. Glanced at them, liked them. Didn't put them in my newsletter. And this is an E/A. See, sometimes I like to do this just as being a little conservative. There'd be nothing to do right now with an F/B. I want to assess whether this is going to be a peak D that pulls back just to retest at 84.73 right now with a high in the 86s 3 days ago, whether it's going to come back and test the 83s, which would mean that the MACD flattens out a little bit. It's looking good right now, but the stochastic's only at 70%, but it is rising. And even the monthly, I used to have these all notated. I don't know what happened to those. So let me just do this again. A, B, C, D, and it went to a peak E top in 2014, just under 120, dropped down to 60, and now it's trading at 84. Big move up. Yeah, I do like it. I'm just going to say I'm going to hold off saying a question about it. What was the question? Let's see. So Bob asks, just the Chapman Wave. Yeah. So this is a peak D in the, I always want to double check. Did I pick out the left side low? Oh, look at that. You've got to be so careful. So this is A. Always pick out the low bar. Otherwise, you're going to mess up. I didn't mess up, thank goodness, because it restarted. So that is the up arrow right here back in September. And here we are with an up arrow, which has to be changed to a plus sign, because this is like what I call a restart. In fact, I'm going to put it down here. I'll put SL. Let me stretch over here. SLB web September, October restart. This is called a restart in the Chapman Wave methodology. Great. Nice example. It'll probably be either this one on Tuesday night, or we'll talk about it the following week, because it has to go together with the stochastic and the MACD. So yeah, what I'm saying is it's done very well. The stalling says, you know what I do? I grab the top and bottom, and I always put in a rectangle formation, and then I refine the rectangle. Usually I lower it and I raise it. But at this point, I'm just giving it the outer limits of 86.25 and 83. And I'm just saying, I think it's going to trade in a little band for just a little while, and then we'll know soon enough whether or not it's going to break out. Well, what is the wave count? I'm calling it F/B in the weekly chart rather than F. and rather than a B. I need just to see how it holds into Wednesday and by. You can ask me again Wednesday. I'm pretty sure I've made a decision whether I'm going to call it B, going to a C and a D. That's my guess right now. But having just gone above the 200 period moving average, something else I'll be teaching in great detail. What's the magnet line, the 9 period moving average and the 200 period? They've crossed positive. What does it mean? Well, it says that this is now going to be a magnet. There's a good chance at some point over the next 3 or 4 weeks, it'll come back to the 82, 81 area to try to test the support before it breaks to the upside. That's the way I'm looking at it. All right, next, and then USO is the question. Well, I just did oil. USO is exactly the same thing. Leg D right now. 1179 is the target, and we'll see what happens there. If I did left side, right side, price, time match, it would be exactly the same. There's my plumb line right there. Oh, no, it's not. Plumb line right there. So this one can go on for another 2 days before it tests the 1179 area. Good. We've done a chunk of stuff. So those are the oil calls. Okay. GT wants to know, has the EUR USD put in a bottom? I just covered that in regard to 3 things. One is the action in the dollar and how the dollar holds, and is it going to rally and try to go to a new recovery high? The euro dollar is the inverse. This is like the look at this arch formation, and it's held. It didn't even touch the trend line support. So far, this is very good action. The MACD is flattening out, which is good. The histogram's improving a little bit in the weekly chart. Stochastic has made a turnaround. On balance volume is okay. It's not great. But what's most important about it is that you've got the H pattern that went to an M, and the second time when you come down in this formation, that's where you get the test. So far, the test has been successful. Number 1. Sorry, that's number 2. Number 3 is this Roman candle, Chapman Wave Roman candle, when it comes at a bottom rather than at a top, can be very powerful. So I'm at this particular point watching the dollar very closely. I'm prepared to say that the dollar looks vulnerable, the MACD and stochastic in the daily. The weekly still looks very strong in technicals, but the prices moved down. And the monthly chart is hanging in very nicely after making a PD. Make it real simple. A close in the 99s, 2 out of 3 sessions would say to me, you know what? We've made a peak in the weekly chart, and we're going to be pulling back. The euro dollar is finally making some kind of a... Okay, the question is, would you be long the euro dollar? If I'm not long the dollar, and I'm not short the dollar, I have just watched it, I'd say right here at 1.0718. I don't know I don't ever trade it, so I don't know what the increments are. Like the E-minis trading 25 cents, I know that. If you're prepared to take a chance right here with 120-minute chart support at 1.066, I'd say, you know what? I'd have a little nibble here. The dollar's not acting that great. But my guess is that the dollar and the market tend to, at this phase, are still going in the same direction. So I would have it as a small position. You treat it as the first real sign that there could be a rally in the euro. EC. Yeah, it's exactly the same. EC, of course, has the same. Now, this is what I wanted to show you. I discussed this last week. You remember? I discussed this pattern, and I showed you the arch formation in the weekly chart has made one H and then a second H, or arch. And this is leg E to the downside. So I'm just suggesting to you that you might have a rally here, and I would actually start a little position in the euro dollar if you are a trader. And keep a tight stop, that's all. This is the best chance it's had to do some rallying, okay? Because the dollar has, if the dollar has only shown weakness for one day, I'd say, don't mess. But this has been 1, 2, 3, 4, 5, 6 sessions making lower lows and lower highs. So until I can get something established where I've got the Chapman Wave falling axe saying, whoa, now you've got some strength. If you break above that trend line, I'll lower the trend line, and I'll give you exact number. and you start to trade at 101.62 or higher, that would be very good action in the dollar. Okay, I hope I covered that. You remember Amazon? I was looking at, I said, gee, I'm worried about Amazon. Together with the RTH, I still didn't do it over the weekend because I just had too many other things to do. The relationship of Amazon to the retail index, I'm actually looking at them both and saying they both are kind of weak. Coming off the top, so they're at in the upper range of all-time highs, but they've been weak considering we're going into a period where sales should be really good. I'll talk about sales in a minute when I get back. Dow's up 81, S&P's up 40. Basil Chapman, Tiger Technician now, getting ready for Tuesday's first webinar.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Folks, we're looking at natural gas at 3.634, up 19 cents in leg B. This is very good action. This is, of course, the time of the year you'd expect to be working, I think. I mean, it's not my area of expertise, but I do believe that you're coming into winter. So this is very interesting. Peak F, very sharp pullback in the weekly. And look at the V-shaped recovery. So that's what happens with these oils and gases. Boy, the moves are very quick. So far, very good action, natural gas. But I had a question about the commodity index. What was the question? Was a statement. And the statement was HG copper at 271 plus 0.085. Big firm calling for huge up move in the CRB. Oh, GT, thank you. Yeah. So here it is. Leg C in a buy mode in the daily. And a weekly is a nice bounce, but so far it's only a bounce. And the monthly is kind of stuck. So we're going to have to look at this closely. So far it's good action in the shorter term. intermediate term, it's held in a high-level consolidation. I'm watching this very closely. Couple of things I want to do just before we wrap up. I'm going to be discussing tomorrow the context of why the monthly charts are so important at this stage. Why, when you've got the Dow, IND, in leg D, I'm not getting very nervous, and that's exactly the same thing that happened with the daily charts last week. The Dow and the S&P went to Ds, and then peak Ds. And I said, no, there is still inner strength. I cannot go short just yet. I don't know if I'm going to be able to time it correctly, but so far it's saying to me, I've got some indications that are saying from now the upside is extremely limited this week, but there should be some more upside, but it's becoming much more selective, number one. Number two is the S&P. Just as I said, the IWM, the Russell 2000, hasn't made its C, let alone its D. So I'm looking at the monthly chart of the S&P. This is very bullish. It's only in leg C, and it should go to D based on the Chapman Wave methodology. When we're looking at the daily, it hasn't made a new high. QQQs, this is the rotation that I'm talking about. Amazon and those big guys are not doing very well. So that's affecting the Qs. The IWM, as I said, I believe it should try to go to 134.11 for leg C and then maybe squeeze out a D. Then we've got to be careful. The TLT, good opportunity here to at least attempt a rally, but it's really struggling. It's on this left side, right side price time match in the weekly chart that I've drawn in, Chapman Wave parallel trend lines. The TLT is going to be very important because it's the Lehman 20-year T-bond fund. Now, this is what I want you to do. Within the context of the markets, the fact that the IYT has recycled and it's gone into leg D in the weekly chart, very strong. Monthly chart hasn't gone to the 167.80 all-time high back in November of last year, but it's working its way there in leg B. But this is really what's intriguing to me, is that the daily chart has recycled. It's in 57, it's in leg F/B. So either tomorrow we're having a huge pullback or we recycle higher for just a couple more days. And that would match what I'm looking at here. And you want the IYT, the transports to be for Dow theory, which I followed for decades. I like to only put it together when I actually see it working, not when it's not working. But when it's working, it says the Dow and the IYT, the Dow Jones Industrial Average, the 30 stocks, should be in unison. It's good to have them in unison with the transports. But when that happens, very often within a short period of time, they both come down. But I like to see them going together for a while. So this is going to be a very important Dow. I think the Dow, most of the upside is pretty much done. We're just playing catch up. That's really what we're doing. Folks, stay tuned for the, this is going to be the swim lesson coming up. But please, if you're interested at all in learning about the Chapman Wave methodology, take your opportunity, go to the front page of TFNN. This is the perfect time for it to learn three webinars, basic tools to analyze charts, as well as the notation in Chapman Wave. But the tools are absolutely fabulous to be able to put together. Thanks for being here. I'll be back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.